Hello and welcome to another episode of the Power Law Investor. Today is the 21st of February, 2026, Friday. And today we're going to be covering a new crypto for the channel, which is called Hyperliquid or Hype, Hype. This is something that I've been looking at for the last couple of weeks. I think it is pretty interesting. And what I'm going to give you today is the PAI value perspective, the PAI momentum perspective, and also the financial metrics perspective in which we evaluate Hype as a business. And so based on that, you'll be able to see what would be the potential at different price levels for Hype. Now, I do not have a position in Hype right now, but I may start one depending on which of these triggers gets it. So this is not financial advice, it's for educational purposes, so do your own research. And if you do like the content, give it a thumbs up, subscribe to the channel, and of course, sign up for updates, including updates related to Hype at powerlawinvestor.com. Let's get to it. So, Hyperliquid, just to give a very brief summary here, is we'll just look at the chart while we're at it. Hyperliquid is a decentralized exchange. It is built on a unique blockchain, which gives it certain advantages in terms of execution. This is not going to be a detailed discussion in terms of the actual technicalities over here, but basically it's a decentralized exchange. The exchange collects a percentage of the entire volume that flows through, and that percentage is used to burn Hyperliquid tokens, right? So basically, the algorithm gets a certain amount of dollars on a daily basis based off the different cryptos that are going through a certain percentage, and then it uses that to burn Hyperliquid tokens, so the rest of the tokens become more valuable because you're burning a certain percentage every day. Right? So I hope that gives you some idea. So let's look at the price action now from the perspective of PAI. Now, for those that are not familiar with this, the PAI is a number that's calculated from 0 to 1. The closer it is to 0, the colder it is. The closer it is to 1, the hotter it is. The closer it is to 0 is more oversold, so it's a good buying opportunity. The closer it is to 1, the more overbought it is, so it's a good selling opportunity. It's an algorithm that is causal. You can see here, this is learning as time goes on. So you can see it starts detecting blues here, saying like, oh, we're dropping down. And then the more data we give it, the better it becomes. By causal, which I said, I mean that it's only backwards looking. It doesn't look at today's price and figure or repaint what the prices in the past have been. This is the actual value that you would have had. So for example, on the 9th or the 25th of September 2025, the value would be 0.312. It has not been influenced by the future value since. And so as time goes on, the algorithm learns more and more and is able to produce better results generally as time goes on. And you can see over here, it's sort of doing a pretty good job at calling the local bottoms. They're becoming blue. The higher values are becoming red, blue, 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 right? And so the difficulty of using something like this of, hey, I'm going to buy in blue and sell in orange, is that we don't know how much bluer it's going to get, right? So for example, here it went to 0.235, but you could also have been buying here, for example, at 0.312. So how blue do we get and how orange do we get? And an answer to this, we can look at the histogram of values, and it tells us how much time we've spent in each PAI zone. And this is the cumulative distribution. That means it's the sum of the one above. So for example, between lower than 0.3 has been the sum of 7, 2, and 4.7. That gives us 13.7. So basically, it spent 13.7% of the time at a PAI of 0.3 or lower, right? So I hope that makes sense. Currently, the price is at is about $30.5. The PAI is at 0.55, which when we come down to a handy chart means, oh, it's about maybe 60% of the time, 55, 60% of the time, it's been lower, right? And so a reasonable strategy would be, okay, I want to wait for the bottom 10% of the time and buy it over there, right? Or maybe the bottom 13%. Let's call it the bottom 10%, right? So if it spent 10% of the time near the bottom, it spent 90% of the time higher than that. I like those odds, 1 to 10, 1 to 4, but the higher the odds in my favor, the better. So if we look at this in here, so we had a chance in February 18 with a PAI of 0.147, right? 0.147, when we look at that, would be in this region over here. So we'd spent maybe the bottom 6%, we were in the bottom 6% of the time. That was a pretty reasonable buying point, right? If you look at it, we didn't immediately get a surge, but we did have a surge that took place later. The other thing to realize about these PAIs is that they dynamically adjust to how the movement of prices is taking place. So the PAI here was 0.147, but here at a lower price of $21, here we had $22.50, here we had $21, the PAI actually increased, right? So it's not exactly a high price equals high PAI equals this lower high price equals a higher PAI at a different time. At a different time. The difference in time does make a difference because you do have these adjustments, right? As the price level changes, you can't use the same price over here at a really early asset, for example, but it's taken off to be much higher, right? And that's what you can also see in the logarithmic curve over here, that we did go all the way down to whatever this value was, $10 or so, right? But then we also went up all the way to $58. So the PAI adjusts, okay? And because of that, it does well at local values, but at global values, you have to get more extreme values, right? So that's why when you get a value in the bottom 10%, that's a pretty good sign, generally, right? But as you will see, there are nuances on that. So if you say, hey, I want to be buying hype at the lowest 10% of the time that we have, or let's call it the lowest 7% of the time, you'd be buying at a value of 0.2 or lower, and 0.2 would correspond to a value of about $21 or so. And the idea with that is, hey, I'll be buying low and I'll be selling high. And of course, that's a reasonable strategy. But there are two problems with that. You have to know when to buy in terms of what is the right PAI to buy. I mean, do you buy it here at this point, you buy it here at this point, or you buy it here at this point? And then you also have to know when is the right PAI to sell, right? So do I go ahead and wait for the 79% or the top 20%, the top 15%, the top 7%, right? Because you can always get lower prices and you can also get higher prices on the selling side, right? And so this is a probabilistic framework. It gives us what has happened historically, but it can't predict the future. I mean, it gives you an idea what the future is like if you think it's going to be similar to what's happened in the past, but no one can tell you deterministically what the future is going to be like, right? And if someone tells you they know what's going on, then in the future, without a probability assignment to it, you got to think about what kind of person and what kind of analysis they've actually done. They say, this is going to happen. Trust me, bro. Right? So trust me, bro should have a probability assigned to it. That's why in this channel, I like to talk about probabilities. And so the other way to go about and sell that, and some of the more astute ones of you might have realized this, is this buy and sell zones, is this idea of momentum. Right? And momentum means, hey, I'm going to follow the trend. And so value could be thought about, right? There are two sort of basic ways of investing. I'm going to buy low and sell high. That's one metric, one way to go about it. And the other way to go about it is you're buying, I'm buying. You're selling, I'm selling. I'm going to join the herd. And I'm not going to catch the absolute bottom. And I'm not going to sell at the absolute top. But I will get the bottom 50, 60, 70, 80%. That's good enough for me. And in markets like what we have right now, that is generally a better way to play the game because it's difficult to assign values to something like crypto because generally there's not any physical assets or any income flow behind it, right? And so because of that, you can find measures like the PAI, which is why I created the PAI, which will give you some idea of what that low point is, but it's not perfect, right? And very much like, and this is also, you have analogies to what's going to happen in the stock market, right? So if you look at a stock like Microsoft, trading at about $400, and you can say, do we know whether it's going to go lower or not? We don't, But we do have this base around the physical assets, right, of the income that the company is making in. What's the price to earnings ratio, which is around 23 for Microsoft right now. So how much money is the company bringing in? That's sort of one measure. And then the amount of assets that they have could be another measure, the amount of sales. Lots of different ways to measure stocks. But in crypto, unless you have something coming in, which is one of the reasons I do like Hyperliquid, is because you do know how much is coming in. It can be difficult on the basis of price alone, although the PAI is one estimate to do that, right? So if you're catching at the bottom PAI, you can buy when the PAI is higher. That's definitely one way to go about it, especially if you're buying the lower time bands, right? But it's not for sure because you can always go down lower. So for example, here early in the history, you had a PAI of 0 and it just kept on going down. And so it's important to understand that the more history we give the algorithm, the better it is. And of course, in the beginning, the algorithm is calibrating, so you wouldn't use this to make decisions. But you can see we only have about 401 days of data, right? Which is not very long, say, compared to Bitcoin, which has about 6,000 days of data, right? About 15 times more. So that's kind of what we want to be thinking about is, okay, how do we try and capitalize on the trend? And capitalizing on the trend is a relatively simple way of going about this, is that you look at the 0.5 PAI level. If you are above the 0.5 PAI level, you buy. And if you're below the PAI level of 0.5, you sell, right? And what you're really trying to do is catch these big bursts up and avoid these big downs like this, right? And then catch this one again. So for example, if you had jumped in at 0.5 over here, it transitions here to 0.5 to, let's zoom in over here, from 0.3 to 0.5 almost, and then we cross 0.5. Okay, now we jumped in, as you can see by the green background shading, all the way from $14, and you finally exit here at $33. Let me just activate these. All right, so you have this bullish crossover here and the bearish crossover here. What you're trying to avoid on the other side is a massive drop, like this one over here, right? You want to get out at 49 and then you got in back in at 44 when the price flipped, but you avoid this drop. Then you got in at 44, the price dropped down, you got out at 42. So you took a small loss, but not a huge loss. This is where it was really useful. You got out at 38 and didn't get in until it went down to 28, right? So that 30% drop you were kind of saved from. And again, most recently, the bullish crossover was at $25, right? So that means we rode that all the way and you're still up. And the transition would happen at $29. So you could potentially sell up here. And you can also just hold and have the exit at 29, right? So from 25 to 29, you've made a good 15, 20%. So those are reasonable, but really what you're trying to find is this thing, right? When it really takes off, and avoid this when it goes really down. And so when buying, when the price shoots up above the 0.5 PAI, it gives you a real strong metric and saying like, okay, I need to get in. And then when the price drops down, very mechanical get out, right? So instead of making these judgment calls over here, how much lower can we potentially go? Is this reasonable, right? It's a much more mechanical strategy, right? And mechanical strategy can be good because sometimes you're going to get a lot of different emotions in the market. And that's one of the reasons why I like that, right? Even though, again, I don't have a position in hype right now. And so most recently, like I said, we'd be getting in around $25 and writing this up here, right? And so when you look at that, you can get an idea what the 0.5 PAI would be, and also what the lowest values that we expect to see in a short time frame would also be, right? So if you gave me the opportunity to buy hype at somewhere between 19 and $17, I think that would be a reasonable buying opportunity, right? Because you can see it spent such a small amount of time, 5-6% of the time in that zone. On the other hand, if it takes off above $29, if I was below it, particularly at transitions, then that would be a good buying opportunity. So that gives you a little bit of a statistically derived perspective on how you might make these decisions. But probably the most important decision that you can make with any crypto is evaluating, does this thing have something unique and will that translate into real value, right? Because there are so many different cryptos that have languished and gone nowhere because there's no value there. And You can look at meme coins, for example. They capture attention, and then the attention is discarded, the price collapses. So what you want to find is something that has something real behind it. And that's where I want to talk a little about Hyperliquid. Does have that from a financial side because it's an exchange and people are actually using that to trade crypto tokens, right? And here you can see is this from the Hyperliquid Hyperscreener site. And this will give us the third perspective over here, is that you can see the amount of volume. Let's just go to weekly over here. You can see the amount of volume that it's doing on a daily basis. So just on February 20th, that's yesterday, it did about 2.7 in Bitcoin, 2.7 billion in Bitcoin, about a billion in Ethereum, Solana 250, Hype, the native token, or 173. You add all that up and you're looking at about 4.5 billion, right? And out of the 4.5 billion that's traded, Hype gets a certain percentage of that, and that percentage is used to burn the Hype token, right? So the token holders that do have Hype, they are basically sort of claimants on this business, right? And those earnings are used to remove Hype from the system, and there is a ceiling on the amount of Hype tokens that are in the system. And we'll talk a little bit about that, right? So you can think about that from a shareholder perspective, like, okay, what are the earnings of Hype coming through? And that's what the analysis I want to do is adapting from that shareholder perspective, right? And so if you look at this, you can see the amount that Hype has been doing has varied around. It was one day in which it did a much bigger amount, like almost 20 billion or so, but basically it's been bouncing around this region over here. Let's call it about 4.5 billion or so. And we can use that to try and make an evaluation on Hype, right? So the daily volume is the amount that's flowing through in revenue of the coins. The take rate, which is what I averaged over the last couple of months, is what percentage do you actually get of that? Does the exchange get? So the daily revenue is 5 billion, and you get 0.03% of that. That's about 1.5 million a day coming through, right? That seems quite reasonable. And when we multiply that by the annual revenue to get by 365, we end up with about 550 million for the entire year. So if you owned Hype, if you owned all the Hype tokens, you'd be having the equivalent of about $550 million coming in on an annualized basis, which is a large amount, right? But we have to put that amount in perspective. Is if I, as a business owner, were to buy all of Hype, how much would I be paying for it, right? And this is where things get a little interesting, right? Because you have the circulating supply and the fully diluted supply. So if you go and click on Hype over here, you can see that you have the FDV over here, which is the fully diluted value, right? Which is the full supply, and the circulating supply. The circulating supply is the one that's actually in the market. The fully diluted value means that the equivalent in stocks would be all the options and all the shares that other people have claims to that are not in the market as yet, right? And so if you were to buy it, you can't just look at what's traded in the market. You've got to buy it from the people who are the private owners, right? And those tokens come online and they're unlocked over the last couple of years. And it's mostly the team that came up with this from my preliminary research. So what that means is that you don't use the circulating supply of 260 million tokens. You actually have to use the fully diluted supply, which is about 960 million tokens, right? Which is more about 3.5 times what's in circulation right now. And so with the price today of about $30 and per Hype and 960 total tokens outstanding, you get a market value of 29 billion or so, right? And you can see that 29 billion over here as the fully diluted value. So basically what you would be doing is you're paying $29 billion to get $550 million a year if you just take a snapshot of the business today. Now, is that a good deal? Well, if you're looking at a stock like Microsoft, which we talked earlier, you're getting that at about 23%, 23 times price to earnings, right? Or the PE ratio is 23. So it's almost more than double, like 2.5 times what you'd be paying for a company like Microsoft. Of course, now you have to think about it. Does that still make sense? Because I expect Hype to grow, right? I think Hype is going to grow massively. And now you can look at this look at this dashboard over here, right? And you can see annually, has it really grown? I don't know. I think if you look at the amount that's traded, it's remained more or less stable between 5 to 6 billion. Of course, you've had spikes, right? Like this spike over here for 20 billion, but it hasn't been sustained, right? And I'm sure I'm going to get comments about saying that, hey, these are the reasons that it's about to take off, which is great. So if you just hold on, you'll see how we can incorporate that. So one metric that we use to try and incorporate growth into the price to earnings ratio is understanding is something called the price to earnings to growth ratio, right? Because I would be willing to pay more for a business if I knew the earnings were going to increase. And we use something called the PEG ratio. And the PEG ratio of around 1 means that the price to earnings of, say, around 15 is balanced by a growth rate of about 15, right? So in the case of Microsoft, a PE ratio of about 23 would be balanced by a growth rate of 23, giving us a PEG ratio or PEG ratio of 1, right? So you kind of get the idea. It's kind of a non-linear thing. It doesn't work for very high numbers, but gives you an idea. So given that our price to earnings ratio for Hype is 58, what is the implied growth rate? Like, if you were a rational, reasonable investor looking at a lot of different investments, what sort of growth rate are we expecting? The answer is pretty simple. Like the math works out to be about 50 or 60% a year. Just 58 divided by whatever number, 58% would give you 1. It's non-linear, so you make a few adjustments, but roughly in this ballpark, about 50 to 60% a year, right? 50%. So that means investors, if you're buying Hype from just a financial perspective, you're expecting Hype to be doing a lot more volume, growing about 50% in the next year, right? So let's call it 5 billion now. We expect to be doing 7.5 billion. And then the next year after that, you'd be doing maybe about 11 billion or so, right? So something like that. So that's the kind of growth we're pricing in. Now, do we have that growth right now? I don't see it. But of course, there are lots of supporters of Hype that's getting into prediction markets. There's a lot of regulatory clarity that's potentially coming in. So that sort of growth might happen. But that's, again, a future assumption, right? And for me, do I want to be paying that sort of premium for the growth? Not right now, right? But I do think that something like 20 to 30% growth, when that is implied, I start becoming interested. So if you just half this value, half the $30 that we have right now, we end up with Hype around, for a 20, 30% growth rate between $10 and $15. So from a financial perspective, given if I think that 20% growth is reasonable, $10 is reasonable. $30, 30% growth annually, 15% is reasonable. Of course, there are many different ways to do this analysis, but I'm just giving you a back of the envelope calculation on what would be reasonable, right? And so I'd like to close that discussion by giving us those 3 perspectives again, right? That along this, if I'm buying, I think from a value perspective locally, just based on the price patterns and the price algorithm that I've developed, the PAI, buying between 17 and 19 seems pretty reasonable. On the other hand, if the price is around $29, I'm following the momentum approach, buying at 29 and letting it ride and then selling at a different point whenever it crosses the 0.5 PAI is reasonable. And then, of course, then looking from the financial value perspective, 10 to $15 is reasonable. So again, the question will become, well, you've given all these different values. What really is the right strategy, right? And I'll sort of break that down into the shorter term and longer term strategy for you guys, right? For this is what I would be doing. I think Hype makes sense from a short-term trading perspective right now by following the trend. And that is, if the price goes above the 0.5 PAI, I would be a buyer. So what I would do is I would wait for the price to drop. And then when it transitions again with a bullish crossover, that is when I'd like to go ahead and buy it. All right. That way I'm buying at the bottom of the takeoff when it's switching from a lower regime, a bear regime, to a bull regime, and I'm riding that. If it's very high already, I don't want to currently risk that. All right. So that would be the short-term strategy. And then I have an entry point and an exit point. And you guys can follow along with the channel and see what those entry and exit points are. Right now, basically what that means, it would have to drop into the 28 to 27 region and then go up again into 29. That's when I would buy. Okay? Then, what is the other condition I would buy? If the price really crashed all the way down to about $19 or $17, I would also start buying, but I'd buy in small amounts. And the reason I'd buy in small amounts is because even if the price is low, it can go lower, right? So I don't want to catch the falling knife. And even though this is a statistical approach, we don't have a huge amount of data. And based on that, I would want to spread my bets as much as possible. Okay, so that's sort of a medium-term perspective because I would expect there to be a bounce at some point and I would be able to get out at that point. Now, if you ask me what I think would be so that's medium term. So we talked about the short term in terms of the momentum. We talked about the medium terms in terms of the 0 PAI or 0.1 PAI. And then finally, in the very long term, right, over the year horizon, if I'm willing to hold that, this is probably a point that I would start getting interested in. Right? Because I can anticipate here is what the kind of growth that we're anticipating. I like hype from the research that I've done. I think it has potential. I wouldn't put, my family's fortune or my fortune or whatever savings I have into it, right? But that's kind of the way I would play that. Like, okay, once it gets to the $10 to $15, I think I can start DCAing into it also. Of course, what would be a great price is to be considerably lower, right? When the market really hates hype. And when that happens, we might get considerably lower prices. And really, to be honest, I think that is where the real money is going to be made. Right? If you want to make money in crypto, we have to get the crypto right, what the crypto is, and you got to buy at the right price, at the right timing, right? And what I like about hype is that I can evaluate it as a business. And maybe I won't ever get the price to buy it at $10 or $15. But we know how volatile crypto is. Right? Just a few months ago, we got hype. Well, this is in 2025, but we got prices over here. Hype was trading at $20, right? If you're telling me it can go down all the way to $15, $10, sometime in the next year, that's my guess, everyone will hate crypto. There'll be a lot of negativity around it. And what I think you'll see in hype, although hype benefits from a lot of volatility, right? Because the more volatility there is, the more volume there is on the exchange, and hype makes money. At some point, the volume will drop down for whatever reason, right? Maybe there's a different competitor out into the market. Maybe there's some regulatory issues. Maybe no one cares about crypto anymore, and volumes have just died out. That's the time when you kind of have to put on this hat and say, okay, I know what I'm buying. I know this is how it works roughly, and I have a good valuation metric. So I think that is when we really see the generational buying opportunity. And my guess is that I think we'll get values lower than 10. And that is probably what I'm waiting for. Of course, I'll have to reevaluate what the market is at that time. But based on what I know today, that's the perspective that I wanted to share. So yeah, I wanted to give you guys these different approaches here, right? The short, medium, and long term using momentum, using PAI momentum, using PAI value, and using financial value to give you an idea of what's reasonable for hype. And so if this is useful, please do like and subscribe and sign up at the Power Law Investor. There will be a supporting article for this with higher resolution images. And yeah, do comment below if you have any questions and if you find hype interesting or not interesting. Always looking forward to having a conversation. All the best and see you on the next one.